Hello friends, James Stevenson back with part 5 in my Tesla earnings forecast video review series from my 69 tweet thread that I published on Monday of last week. Let's check in with my co-host Loki. He has his back turned. I don't think he's going to help me a lot today, so I'll just jump right back to where we left off in part 4 and scroll on down to part 5. That's what video we're on. So let's look at the 5th chart in my series. Now, some of you are probably wondering right now, James, are you going to make 69 videos about your 69 tweet thread? No, I'm not. Before long, I'm going to have to start making several of these compressed down into one video, but I try to keep the videos short so that they are approachable, manageable, and people will watch them. What's this one? This is adjusted EBITDA. You may be wondering, okay, for that profitability metric, earnings before interest, taxes, depreciation, and amortization, how much has Tesla made in every quarter going back to the beginning of 2018, which you see above the white bar, which is the actuals. And then for the forecast to go, I should have stretched this bar a little bit more. Q2 is also an actual. Let me go fix that. Is that wrong in my PowerPoint? It must be. Yeah, I forgot to update that, sadly. So I'll take you on a quick diversion to my earnings projection model. I've already updated it through 9/17, but I'll show you. You get bonus content here because I need to correct that. So if we come back all the way through all these charts of mine, eventually we're going to find one that is this EBITDA chart. I think maybe it's this one. Yep, that's the one. And if you want to know a little bit of inside baseball, hey James, how do you make these forecast and actual bars go? You just do it like this. You just drag them from the corner. There you go. Easy and done. Okay, so that's up to date now. I'll get rid of this. And we'll go right back to looking at it here. I think the PowerPoint slide probably has the prettiest and cleanest look for displaying in this video. So we've got some decent growth here. It doesn't look all that decent because of the size of the scale. At one point I had EBITDA up to $42 billion for the adjusted EBITDA by quarter actuals through 2023. Let's look at this a little bit closer. So if I go back to my Excel spreadsheet and I bring up the data where this is coming from, select data, you'll see we're looking at the quarterly information here. So here's 2023. In Q1, the actual was $4 billion. In Q2, it was $4.6 billion. I've got that rising to $4.8 billion in Q3, despite lower deliveries at lower ASPs. We'll go through the rest of the forecast for why that is. And then Q4 at $6 billion. Where do we have it ending up? 2024, 7, 8, 10, 12, 14, 16, 20, 28 is where I'm ending over here. For a single quarter, that is a lot of adjusted EBITDA to have in a quarter, but it's down from what I was forecasting, you know, a year ago or whatever, when it was up closer to 420, $42.0 billion per quarter. So I still have it going there. How on earth can this be? Well, I explained it some in the tweet. So if we go back to the tweet here, and I close out of this, I say my forecast has no autonomous robots or robotaxi fare revenue, but does assume Tesla will grow earnings. As full self-driving becomes more compelling, more Tesla buyers pay for the option at premium pricing, and Tesla prioritizes FSD orders over the next several years. So most of this growth is coming from full self-driving take rates improving. So more of the people who buy Teslas will be doing it for the full self-driving once the full self-driving is working really well in terms of not needing human interventions to drive you anywhere you want to go. If Tesla is the only car company offering to sell you a vehicle that can do that, they ought to be able to charge a premium for that service. Nobody else offers, and nobody else is likely to offer in the near future. Now, it's not guaranteed that Tesla will be offering it in the near future. We've heard Elon say every year for many years that Tesla is very close to solving full self-driving, and with version 12, it seems promising, but we don't know yet when FSD beta will lose the beta part and just be a full self-driving software package. And we don't know at what point Tesla will assume the liability that the driver doesn't need to pay attention. That has not been announced yet or even hinted at. Tesla has been resolute in their warnings that drivers must be paying attention and prepared to take over with their hands on the wheel at all times while using FSD beta. But if, in one of these quarters, sometime soon, people start to realize, hey, I don't have to drive the car. I can buy a Tesla and just tell it where I want to go, and it'll drive me. A lot of people are going to want to buy that kind of car, right? So that's the assumption that's in my forecast, is that the take rate for full self-driving as a paid additional feature will increase over time, and that if Tesla gets way more orders than they can produce, they'll be prioritizing delivery of the configs where people chose to pay extra for the full self-driving option. That's what all that means. Now, what's not in here? I said autonomous robots are not in here, and robotaxi fare revenue is not in here. So the revenue I'm assuming in here is from the people who buy the Tesla wanting the full self-driving option, not from robotaxi riders using an app to summon a Tesla to take them wherever they want to go. I don't have that kind of revenue in my forecast. But if Tesla can nail this service, a lot of people think that's worth more than $1 trillion worth of market cap, because so much of that software as a service revenue would flow through to the bottom line as profit for Tesla on vehicles that Tesla may not even own or need to do any upkeep on. If regular Tesla owners add their vehicles to the fleet, then Tesla has already been paid for and made a profit off of those robotaxis that are out collecting fares, taking people where they want to go. The owner is going to get some of the fare, the amount that rider is charged for using that robotaxi service, and Tesla will get some fraction of that fare revenue. And the portion Tesla gets is going to have very little variable cost associated with it, right? So that's how you get to $1 trillion valuation on robotaxis as a business. Then for autonomous robots, if Tesla can figure out how to make a robot that can learn how to do simple work, that alone is probably worth more than $1 trillion if Tesla is able to produce those robots in, at mass scale. If they're able to scale that product up and sell those, they can replace a lot of manual labor, especially for jobs that are dangerous, jobs that involve repetitive motion, where human beings would get repetitive motion injuries or strains from doing the same thing over and over again. Hard, lifting and carrying jobs, that sort of thing. Robots would be able to do that work better than human beings do, and they'd be able to do it longer, and they would take less breaks, and those advantages are worth money to the people who would be buying those robots. So you could sell them for a lot, as long as Tesla can keep their costs manageable on these robots, and it seems like they ought to be able to if they can get them to scale production. So if this is worth more than $1 trillion, and this is worth more than $1 trillion, and this is worth more than $1 trillion, then maybe Tesla is worth more than $3 trillion at some point in the future when they've nailed this and this and, automobiles. Just regular auto revenue, like a regular automaker, along with these two, which are more like AI company revenues. Yeah, there you go. So that's where the adjusted EBITDA in my forecast comes from, and a couple of hints at a couple of lines of business that aren't even included in my profit forecast. And that's today's video, so I'll check back in with Loki, who has not stirred from his slumber. And I'll say thank you for watching this video. If you like this video, click the like button on whatever platform you're watching it. Thank you for your support, for those of you who are supporting me on Patreon or on YouTube or on Twitter for only 69 cents per week. And a special thank you to my two executive producers, Kathy Kitchler and Rebellionaire.com, and I'll see you in the next one.